This was a disgrace. This was a rigged trial by a conflicted judge who was corrupt. It's a rigged trial, a disgrace. They wouldn't give us a venue change. We were at 5% or 6% in this district, in this area. This was a rigged, disgraceful trial. But the real verdict is going to be November 5th by the people. And they know what happened here, and everybody knows what happened here. You have a Soros-backed DA and the whole thing. We didn't do a thing wrong. I'm a very innocent man.
Coming up today, the first former US president to be found guilty of a crime. What it could mean going forward. Could it spill over into something bigger? What stocks are reacting to the verdict? Japanese bond yields hit decade highs, rising geopolitical tension, and more signs of inflation accelerating. And a warm welcome to the Daily Market Review, everybody, on this very interesting day indeed. Former US President Donald Trump just found guilty on all 34 counts in a hush money trial in New York, all of which I'll get into soon. First off, just want to say welcome to all of you from around the world joining me today. As each day I have people from over 40 countries around the world tuning into this Daily Market Review, which has been hitting record numbers, and I'm proud to announce across all channels, total audience for Click Capital is now in excess of 10,000, and I couldn't have done it without all of your support and all of you guys that support independent financial journalism by hitting that like button each day. I truly do appreciate you. And if you haven't already, think about hitting that subscribe button, and I'll keep doing my best to keep you updated every day on what's happening across financial markets and all the macro events that play into it, so we can all make better decisions in our portfolios and for our families as well. Okay, so just touching on the technicals briefly before I get into the main news story of today. Like I was saying yesterday, we had signs the market was on a bit of loose ground. We seem to have fell apart a little bit more here today. S&P 500 taking out multi-week lows, finishing a bit down. However, there wasn't a whole lot of bearish breadth out there. It was actually mega cap tech pulling the indices down. We actually got a bump up in the Russell 2000 today, finished higher, back above its 5-day moving average. The only thing is we got green across the board. It's the 10-year yield, utilities, and inflation expectation. And so like I said yesterday, I still think the S&P 500 could come down, test its 50-day VWAP around that 5170, 5150 level, and we'll be looking for technical signs of it finding support there. But like I said, it was mega cap tech that fell today. Composite chart of the Magnificent 7, down 2.5% today when we got the Russell 2000 small caps, actually finishing up about 1%, and that showed up in breadth as well. Bit of a bounce there in short-term breadth. However, we've still got volatility climbing, getting within an inch of the 15 handle today, and there's the big fella NVDA actually pulling back 3.7% today. Further news, US is curbing AI chip exports to certain countries. Government's trying to stop a group of countries from getting a hold of advanced American technology. However, stick with me today because I'll come back and dive into the charts and show you everything else I'm seeing out there. First, let's cover the biggest news story of today, which doesn't just have big effects on American politics. The upcoming November election, why we've got to cover it is because it does spill over into financial markets, can affect a lot of industries, and these are the issues that you, my viewer, are interested in hearing about my opinion and analysis. And let me first just start off by saying I'll try and keep my coverage on this as neutral and as objective as possible, as I know this is a very sensitive and controversial subject, like it is anytime I mention Trump. And just personally speaking, politically I'm kind of a centrist. I don't have a strong affinity or loyalty to either the left or the right. Looking back throughout my life, I've voted for both the left and the right, and I try and view each election and political candidate objectively and look at their policies as well. So I want to make that clear because I know I've got people from all sides of the political spectrum watching the show, and I'm not trying to offend anyone. And like I said, everything I say, I'm trying to be as objective as possible. And at the end of the day, it's all just my opinion. And no doubt, a few people are going to disagree with me, and that's to be expected as well. Okay, so for those of you who don't know, Trump was just convicted in the hush money trial case, which he was accused of paying off a porn star, Stormy Daniels, just before the 2016 election. A jury in New York has found him guilty on all counts. First time a former US president has been convicted of a crime, and it's certainly making this lead up to the presidential election probably the most diabolical one of our lifetimes. Entertaining at the very least. And don't get me wrong, I'm not here to defend Trump, to say he did or didn't do anything. However, there is an old saying that all men are guilty of something, especially when you get to Trump's age and have done as much business as him. Pretty much all of us have some dirt that can be dug up. In fact, this same thing has happened to a lot of high-profile men, both in politics and business. Elon Musk has found himself in the same situation. Even the current sitting president has a long list of women accusing him of inappropriate behavior, not to mention evidence of the Biden family, collecting tens of millions of dollars from overseas officials through a web of companies. Same with the Clintons, also been accused of pay-to-play politics. And let's not even get into the close relationship Bill Clinton had with Jeffrey Epstein, in which he's been pictured in getting close with his victims as well. Or Hillary Clinton, deleting 33,000 emails. Like I said, my point is not to accuse anyone of anything. Pretty much all politicians are dirty. You can pretty much find dirt on all politicians, some worse than others. My point is what's happening in the United States right now isn't good for American democracy and by extension global democracy. When you've got legal actions being taken against a running and former US president just months leading up to a federal election. And like billionaire hedge fund manager Ray Dalio says, it's just pushing the US closer to the brink, even talking about a civil war. And one thing's for sure, it's not moving in the right direction after today. And I think whether you're from the left or the right, we could all agree that this is not healthy politics and it should be just left up to the voter and having an honest election, as who Americans want to be their leader for the next 4 years. And it's not just rising internal political rifts. Dalio's also pointed to extreme levels of government debt, significant wealth inequality, which I really think is the biggest factor that's causing a split in society. Class warfare, not identity politics that mainstream media tries to rage bait us all in. So all in all, in my opinion, this is not good for American democracy and by extension the economy and financial markets long term, especially so with the huge amount of US government debt and Federal Reserve policies that have amplified the wealth inequality gap, taking us on a path where the top 1% own 90% of all society's wealth. Okay, so that's a bit of a reaction to today. Politics, long-term views, what about the here and now and how that affects financial markets? Because that's what you come to this channel for, is to hear me put all the news, data and charts into context with my analysis and opinion. Well, as you can imagine, and like I've always said this year, you could think of Donald Trump's stock, Trump media, as a proxy on his path back to the White House. And just looking at the daily chart of DJT going into today, it's actually on a 4-day rip. However, going down to a chart after hours, it sharply sold off once that verdict came through. Closed the regular session just below $52 a share. We actually got down as low as $44 a share, down over 10% at one stage before it looks like the dip was bought. However, we still finished a bit lower here at $48.66. And just like Ray Dalio said, this is igniting political anger amongst the masses. And apart from Donald Trump stock, I scanned the entire market. The only other group of stocks really reacting to this, funnily enough, are weapons and ammo makers like Smith & Wesson, up sharply after hours as well. Closed the regular session at 16.20, up about 5% after hours. Same with ammo, trading up after hours. And others like Sturm Ruger, which are in the business of manufacturing firearms, all ticking higher after hours. And the S&P 500 came off a bit after hours as well, down 20 basis points. And I'd say we could get another bump up in the VIX tomorrow. And maybe that's why it's already popped up going into today. So overall, not a huge reaction in financial markets right now. It will be interesting to see what happens tomorrow and where we close. Looks like gun stocks are going to gap up. Trump stock's going to gap down. The market's a bit weak after hours going into it. Of course, anything can happen. Things can change a lot overnight. It will be very interesting to see the price action we get off tomorrow. But going forward, what does this mean for the election, in my opinion? Because this isn't just about politics. Whoever wins the next federal election is going to have a big flow-on effect to a lot of industries, markets, tax rates, you name it. There's no bigger player in the markets than that of the governments. Well, just looking at a popular betting site, Polymarket, over $142 million bet on the next election. Bookmakers have got Trump still at 54%, Biden at 39%. Somehow Michelle Obama is still in there at 3%. And with a lot of people saying this could actually improve Trump's chances of winning the election. And apparently the website that accepts donations for Trump has just crashed with an influx of people rushing in to support him. And even though he's just been found guilty, the judge won't hand down his sentencing to Trump until the 11th of July. But it's highly unlikely he'll be put behind bars. That could really spark a massive civil unrest in America. However, he's likely to appeal the verdict, could have it overturned, and it really would be in America's best interest. Again, in my opinion, try and sidestep this legal clown show and just let Americans honestly vote on who they want to be their next leader. If that's even possible at all. Considering in a lot of America, you don't even need an ID to vote, something that's unheard of in other developed Western democracy. And there's Trump's reaction on his own social media network, Truth Social, with him saying my civil rights have been totally violated with this highly political, unconstitutional, and election interfering witch hunt. Our failing nation is being laughed at all over the world. Now, I'm not an American citizen, and I'm not laughing at what's happening over there. However, it is a bit worrying and disturbing to see this happening, and it's not just against Trump. If the Republicans were doing this against the Democrats, I'd be saying the same thing as well. Like I said, it's not really healthy for what's supposed to be the world's leading democracy, doing this just months before the federal election. And like I said, it does have a big impact on us traders and investors, because the Biden administration is proposing a capital gains tax of 44.6%. That's up from the current 20% capital gains tax. So American traders and investors investors, and potentially foreign investors like me, may have to pay a lot more tax if Biden gets back in, as someone has to pay for all that huge amount of excess spending they've been doing these last few years. Not only that, the Fed and the Treasury haven't been successful in being able to keep down bond yields after they initially did at the start of the month. Had yields firm quite a lot this last week or two, and that's likely presenting another headwind to the stock market here. And that's not just something happening in the US as well. We've got rising global bond yields, with the world's third largest economy, Japan, and their bond yields hitting decade highs. And so the days of 1-2% bond yields may be long gone. Maybe we'll never see it again in our lifetime in the States. And that could be exacerbated by the largest traditional buyers of US treasuries, like China, on a determined path, along with other big emerging and developing economies around the world, purposefully trying to get off the US dollar, as they don't like the US having leverage and ability to issue sanctions over them. We can see that with China on a strong path of moving more of their reserves and central bank purchases into gold and away from US treasuries, something that's been accelerating, especially since COVID. And there's a look at a long-term chart from 1900 of global international reserves, the US dollar here in the red, peaked out about 2013. Since then, it's been contracting, and there's gold in the yellow, steadily climbing back, but still well off the levels from the late 60s and 1971, when then President Richard Nixon took the US off the Bretton Woods system, the dollar backed by gold, and allowed it to be a free-floating fiat currency, pretty much giving the Federal Reserve free rein to print at will. And ever since then, we've had a massive increase in wealth equality, and some say the decimation of the middle class and that golden era of the 50s and the 60s into what some label now as the working poor. However, don't get me wrong, I still believe anybody can pursue economic freedom. There's just a lack of financial education, because it's funny, isn't it? In curriculums all around the world, we're not really taught things like saving, investing, insurance, taxation, how to grow your wealth. It's kind of up to the individual to learn that on their own. And that's something I hope to do in this channel, is to give everybody a financial education and teach how anybody can accumulate wealth. Basically comes down to owning assets. Can't be wealthy unless you own assets, properties, stocks, ETFs, mutual funds, etc. And that's something I go into depth in my online course. I don't just teach how markets really work, how to read charts and price action, what specific investments I have, details and backtests of all my trading and investing strategies. I also talk about creating and protecting your wealth. In fact, I dedicated 2 modules in the course to exactly those topics, as I believe that's really important. There's no point in making money if you can't keep it and protect it. And so that's why my course is a holistic financial education that a lot of us didn't get, and this is something I want to give to my kids one day, as I believe everyone should know how to manage and grow their finances. The course is over 12 hours of on-demand content, lifetime access, one-time fee, and for 2 more days only, you can save 33% off by using coupon code MEMORIAL33. If you're interested in checking that out, click the link below this video and head on over to my website, clickcapital.io. And you can also save on my custom TradingView indicators, automated trading bot, and product packages as well, if you want to get 2 or more of my product. Okay, now that we've covered politics, hopefully I didn't offend too many people. I'm sure I'll be getting a few interesting comments today. Let's dive back into the markets and where we're currently at. Option dealers have flipped back into negative gamma land. And without getting too technical, that basically means moves could be exacerbated. And that gamma flip occurred at 5,300, and we're currently at 5,266 on the S&P 500. And so there's a potential for the market to have its first 2% down day in over 320 trading days over the coming days and week. And one thing I try and do on the show each day for you is let you know what's working and what's not working. As traders and investors, we need to know the trends out there, relative strength, and sector rotation. And right now, the clear winner is utility. Now I've got hedge funds for the first time in 5 years getting back to overweight in their portfolios towards utilities. And that's definitely showing up in the price action and trend of XLU. One of the best performing sectors today, rebounding after that dip, and technically speaking, we are still in a strong persistent trend here, as I can see in my trend strength indicator. Especially looking at some of my favorites, like Next Era Energy, up strong today on massive volume and a momentum thrust signal of mine as well, breaking out to new highs. Also doing really well this year, Commodities. However, the Biden administration has been effective at keeping the price of oil down, releasing strategic reserves, at the same time funding wars in Israel and Ukraine, which keeps an upward pressure on the price of oil. And that could be about to dial up again to a new level, as Biden has just given Ukraine permission to use American-supplied weapons to strike targets in Russia, which is a huge escalation towards Putin. And like I've been saying on this channel for a while, it appears the US-led Western Alliance and NATO kind of egging on Putin, like they're really testing his limits, in which Putin's constantly firing back and threatening nuclear weapons. And like the old saying goes, don't poke the bear. Well, NATO and the US military is definitely poking the Russian bear, and Putin, who hates to be seen as weak, will have to respond if Ukraine does use US weapons to strike targets inside the Russian border. So we can't rule out the tail risk of this spilling over again. And of course, we don't want to see that happen. I'll never root for war or any other civil unrest. However, as investors, we've got to protect our wealth and be prepared for that. And like I've been saying, one of the ways you can diversify is through owning commodities like gold and commodity relating stocks, uranium, copper, the movement towards clean energy, and miners, which are getting renewed investor interest. We're now seeing mergers and acquisitions, volume in the mining sector picking up to decade highs. Good sign of business investment, which is a big driver of industries and economies as well. And just looking at the spread of copper versus oil, which has been on a tear this year, the relatively same spread of global mining equities versus energy as well is actually underperforming the copper versus oil spread, meaning miners could have some potential catching up to do here. And there's a look at a clean monthly chart of the metals and mining ETF XME, looking pretty constructive here, close to breaking out to multi-year highs as well. But don't worry about all that, says New York Fed President John Williams. Even though he says inflation's too high, going to start coming down soon, he reckons. But when asked on where he sees interest rates going next, he said the quiet part out loud. The honest answer is, I just don't know, he said. Just don't show him a chart for the futures curve of Shanghai freight rates, with the market actually pricing it to accelerate throughout the rest of the year before peaking out in 2025. And that correlates with the price of commodities, major cost inputs into all of our goods and services, and of course inflation. But overall, the commodity market was rather subdued today. There's gold pretty much flat. Crude still got some pressure on it, back down to below $78 a barrel, while we've still got some good trends in agricultural commodities like wheat, orange juice having a little pullback, along with soybeans and coffee tracking back to highs. So 2-year yield at 4.92 and the 10-year having a bit of a breather today at 4.54. High yield bonds still holding up good. Bitcoin still consolidating in a bull flag formation. China trying to find its footing near the 50-day VWAP. Clean energy still looking really good here, along with solar breaking out to new highs. Hydrogen still looking good. Inflation expectations still uptrending. Shippers still on an absolute tear. ARK still one of the saddest funds in the history of the business. Energy stocks still pulling back, along with a pullback in healthcare and staples, and a sharp divergence in factors today. Momentum off 1.7%, while value having a bit of a bounce here. Along with cannabis, which could technically finding its footing here. It's been oversold. Just got my second reversal signal firing off. Looking for this 758 area as a zone of support. Apple holding firm here. A bit of a sharp pullback for Microsoft as well, down 3.3%. Along with a big favorite yesterday, Dell closed down after they reported earnings. Along with big drop in ServiceNow and monster drop for Dow Jones component Salesforce, off 20% after their earnings. Just a slight miss on their numbers. Market punished them hard. And there's a look at one of my favorite ways to play the commodity boom, AMARK precious metals. However, to be honest, this price action we've been getting since this last earnings, in which revenue grew, but they missed on EPS big time. I'm a little suspicious on this price action, and I'm looking for this support zone to be defended for it to still be a good investment. Bucking the soft retail trend lately, Abercrombie and Fitch ripped up massive yesterday on earnings, 24%. Bit of a pullback there today. Same with Foot Locker, massive rip as well, showing there isn't broad bearish breadth in retail. It's a bit more selective, and we can see that with Best Buy today as well, ripping up 13% on earnings. And financials as a whole having a little bit of a bounce back today after some of them had been sold off this past week or so, with JP Morgan holding up the best. All right, guys, there we are on this interesting day. The first former US president being convicted on charges which could potentially result in years in jail. However, that's highly unlikely. However, you never know. Say there'd be a lot of civil unrest if he was put behind bars. And like I said, we won't know to the 11th of July. But as it relates to financial markets, futures are selling off a little bit more as I speak. And the biggest reaction came from gun stocks, ripping up after hours in reaction to that. And likely a sign the market is worried about civil unrest. But we won't know until close tomorrow how this ripples out across all financial markets. So it'll be a real interesting one. Make sure you come back to the Click Capital channel for that, and I'll break it all down for you again. However, as it stands, in my opinion, I think this only serves to improve Trump's chances of winning the election. But as always, anything can happen, and I welcome you all to let me know your opinion on this in the comments below this video as I respond to everyone. Thank you for listening to all my analysis and opinion. I appreciate all your support. You don't have to agree with everything I say. And again, it's just my honest opinion, and we'll be following this closely as it all unfolds over the coming weeks. And we'll see whether this sell-off after hours continues into tomorrow's session. Thanks again, guys, and I'll see you all again tomorrow night.